is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome back to another episode of DeFi Decoded. I am Alex Tapscott here with Andrew Young. Andrew, over the past few weeks, you and I have touched on this phenomenon of digital asset treasury companies going public. There have been several that have had a ton of success raising capital to basically deploy it into the crypto asset space. Now, a lot of this is weighted towards Bitcoin and ETH, but there are increasingly a lot more of these vehicles coming out for Solana and many of the other assets. And so the discussion has really been about how crypto is going into the public markets. What we haven't covered as much is how the public markets are moving on to crypto. And that's another important part of this entire discussion. And I think the two are the two sides of the same coin, which is effectively that we're seeing a bit of a convergence between the world of digital assets and crypto and the world of Wall Street. The border that used to be quite significant, I think, and impregnable is starting to become more porous and more blurred. And so I wanted to start off just by talking a little bit about some of these announcements that we've seen where Wall Street firms have adopted crypto-like products or have embraced blockchains as a technology platform for how we move, store, trade, and access assets. So two big announcements from the last couple of days. The first was that the NASDAQ has applied to the SEC to allow for tokenized securities trading. And then the other one, which came out today, which is the CBOE has introduced a new product called a continuous futures. Now, if that sounds familiar, it's because it's their version of what's known in crypto as a perpetual future or a perp, which is a crypto native innovation, basically a futures product that a futures contract that does not expire. So I don't know, maybe it's an idea whose time has come, as I've finally said, but maybe for the last time. But here we're seeing this really interesting embrace that's happening. Maybe regulations have helped clear the way. Maybe the technology is ready for prime time. Maybe there's actually a real business and market demand. Probably it's all three of those things combining. But let's just start off there. What do you make of this seemingly heartfelt and serious embrace of crypto and the technology by big Wall Street firms?
Yeah, I think it's definitely, as you said, finally the time is right. I think clearly the big change is the regulatory piece. This administration is obviously far more accepting and sort of bullish on crypto, particularly stablecoins and sort of real world assets and things like that. I also think it's partly a function of just the bull market cycle. You typically, I would say we're closer to the top than the bottom of this bull market. And typically during the sort of the tops of these bull markets, we always see a bunch of like traditional financial institutions start to talk a serious game about blockchain adoption and sort of start beginning to make announcements and things like that. So it's maybe a little bit hard to disentangle that piece from from like the actual serious stuff that's getting done. This is obviously like, the announcements we were seeing in 2017 were far less bullish than the ones we're seeing now. Like there's actual real world, applications and sort of integrations being done. I think the stablecoin side, as Tom Lee says, it's the ChatGPT moment of crypto. And that's for sure the case for the sort of TradFi institutions. I think stablecoins is like the actual angle that these guys can participate in the crypto space for the first time and actually see money, like see the revenue from it. Whereas in the past, it was mostly kind of like, it was announcements for the sake of announcements. I don't think there was any like actual, business use case that they saw. So I think that's really like the differentiator this time around. Is just like the Genius Act made stablecoins, a real sort of business opportunity, and then the regulatory heat is low enough that you can do this. And then finally, this is also just a bull market aspect of everyone's really excited about sort of crypto. So I think those are like the three big forces combining here.
Yeah.
And So I think like if we go into a bear market, you'll see a lot less of these announcements. But I still think the stablecoin stuff I think is kind of at this point has hit escape velocity and is kind of like a business use case that these firms are going to be pursuing no matter what.
Yeah, I think that's right. I mean, we've seen in past cycles, look, it doesn't hurt for an enterprise to say they're doing something interesting with a new technology, if nothing else, to project that they're innovative, even if they may not be doing something. I think we're way past that with these most recent announcements. This is clearly an example of companies recognizing that this technology can help them to enable new products and services or reach new customers and users or open up new markets that weren't previously available. And those are the big three things, right? And those are all on the revenue side of the business, which is always what I said about some of the early blockchain use cases. It was for the enterprise was always, this can reduce the cost and complexity of settling transactions and securities. And honestly, companies don't typically embrace new technologies only for the cost savings, or new technologies don't reach like mass adoption just because they're slightly more efficient. Usually they have to do something different, altogether better, or tap into something that wasn't possible before. And so to me, I look at tokenization not as let's reduce friction in the clearing and settling function of what the DTCC does. Maybe that's interesting, but like let's tokenize everything and let's make it available to anyone with access to a wallet connected to a blockchain. Let's deploy these things on Ethereum and Solana and see what wins. And if you have a Phantom wallet or a MetaMask, like you can buy treasuries, and you can buy stocks. We're not there yet, by the way, on the tokenized real world assets, but mostly that's a regulatory gating factor than it is a technology factor, because we know that the technology can work in scaling this because we've seen it already with stablecoins. So there's no reason from a plumbing point of view why you couldn't enable it for other kinds of assets. So to me, that's the thing that I'm really quite impressed by, I guess, is the substantiveness of a lot of these initiatives. Now, it raises some other questions, like if the NASDAQ goes to 24/7, 365 with T+0, that creates all sorts of unintended consequences in the marketplace. By concentrating trading during market hours, you create a period of time where assets are liquid, right? If you spread it out over the course of 24/7 on weekends, there's some market commentators who really focus on this stuff have said that it spreads the liquidity out too thinly and can lead to some like unexpected volatility in the asset prices, and that having market hours is really useful. Also, if systems are running 24/7, 365, there's no time to look under the hood and fix any problems, which is something that you can do when markets are closed and on the weekends. And so these are the kinds of things that might be a negative, or not, if not a negative, an implementation challenge that people need to overcome, or that market participants need to get used to. I don't know if you've thought anything about that.
Yeah, I think it's an interesting. I mean, that might just be something that where the technology changes the law, like changes the rules, right? Like, yeah. It's unclear if you know what I mean. Like, in a way, the markets are already, there's pre-market, post-market trading. It's just not really accessible widely. And so like, that's just maybe like by virtue of being fully on chain, like that becomes wide, like way more accessible. I don't really have an opinion on that. I think the bigger opportunity with on-chain finance is that if the stablecoins continue to compound in size at like 112%, which I believe is like the current growth rate over the last 5 years. It's not hard to imagine a future where the amount of stablecoins on chain makes it such that you as a company, potentially could get more liquidity by going on chain versus going public through the traditional markets. I mean, we're probably still a ways away from that, but just the amount of the amount that stablecoins continue to compound increases the incentive for traditional assets to go on chain, because there's just like an ever increasing pile of money, which from like a capital markets perspective, you can think of it as like distribution for your securities. Like the more stablecoins go up, the more distribution is available for on-chain securities to sort of go after. I think right now we're still in the phase where like this pile of money is still relatively small, even though it is growing incredibly fast. So I think that the next obvious iteration is like, okay, I have stablecoins, like I want to earn a yield on that. Therefore, let's bring treasuries on chain. Because like that's like, okay, I have stablecoins, let's earn yield. So that's like part one. Part two will probably be like some assets that are crypto adjacent. So like gold is like a very obvious one. If you own Bitcoin and you own stablecoins, you're probably somewhat interested in gold. Yeah. And then from there, we start to bring more traditional securities on chain. I think probably it could potentially start with like securities that are actually hard to access. So things like, and this is kind of what Robinhood was flagging, but things like,
European
OpenAI. Oh no, not even that. Like OpenAI, because like you can buy OpenAI shares right now. You just have to go through this you have to go through these like SPVs that have huge fees attached to them. It's like and there's also a huge counterparty risk as well, because like if the manager of the SPV mismanages, like you just don't get anything, and they're just very complex. So, and that would also be keeping with this like theme of like regulatory arbitrage being like one of the big benefits, or because like if you bring like these SPVs on chain, maybe make them more transparent, and through sheer scale lower the fees as well. Like that's really exciting. You know what I mean? Like that to me is like a killer use case. If you could buy like SpaceX shares on chain right away for like a relatively low fee with way better transparency than you can get if you like try to set up an SPV yourself. So to me, that's probably the sort of the first use case. And then way down the line, then we start bringing European stocks. But the thing is there's not that much demand for those assets. Like you want something that has a lot of demand, but it's super inefficient to access. And so, to me, that's probably the progression to eventually like the other assets like Apple and stuff coming on chain.
Yeah, I think that's right. I mean, the odds of, again, like the market for Apple shares is pretty efficient and very liquid and very accessible if you happen to live in a place where you can have a US dollar brokerage account, which is a big if, right? It's sort of like, but at least for the time being, if the first users and the most, the power users of this technology are going to be like affluent Americans and Canadians and whatever, then offering them something they can't easily access is definitely a good place to start. Bigger picture, I think tokenization as a token as a medium for owning and moving value of any kind is a very potent and powerful force. The analogy that I like to use is, the internet, like Facebook, opened up billions of people as customers in the developing world by basically like giving them internet access, in effect. The more internet users there are, the more Facebook users there are. Google had a similar kind of philosophy. If you think of like the biggest, most powerful financial institutions in North America, JP Morgan, BlackRock, or the big private equity firms, these companies only have hundreds of millions of customers. They don't have billions of customers because they're largely contained to these regulated markets where they operate. Now, the regulation is a different question, but if the technology is there, someone's going to figure out a way to allow anyone to buy and sell digital assets that represent a claim on securities and other more traditional forms of value. In the same way that stablecoins allowed anyone to move and store dollars, and in the same way that the web allowed anyone anywhere to access the same information. right? If one democratized information, the other one democratized payments, and so someone's going to figure out how to democratize investing, and the token is going to be the tool that is used to do that. So interesting discussion. I mean, at the same time, all these things are kind of still early stage. Like Kraken's announced tokenized securities, Coinbase has announced tokenized securities, Robinhood has announced tokenized securities, the NASDAQ, Larry Fink has talked at great length about this. And yes, they do have the Biddle fund, but it's only available to high net worth accredited investors. And so it's not really breaking free from the confines of the current market structure. It's still doing what previously it did, just with better plumbing, I think. So we're still a ways away from actualizing that future. Let's turn our attention here just to, unless do you have something to add on that?
Oh, no, just really quick. The funniest thing is that, just as like an aside, the first stocks that we are bringing on chain seem to be DATs. So like we have this like hilarious dynamic where digital asset treasuries that are essentially a wrapper of tokens, right? Like it's just a public company. I mean, they obviously do other stuff as well, but it's a public company that buys tokens. Those are the first companies being then tokenized. So it's like a tokenized wrapper of an equity that is a wrapper of tokens. It's inception, but anyways, it's token inception. But I just thought that was really funny because the first couple companies, I think Solana Sol Strategies, for example, was like one of the first ones to say that they were going to tokenize themselves. So,
a public company buys crypto assets to give investors exposure to crypto assets, and then tokenizes the shares in order to put them on chain, so that crypto investors can access the shares that own the assets rather than just owning the assets themselves.
The crazy thing is, what if there's an MNAV?
Whatever. Who am I to judge?
What if there's an MNAV on the tokenized side, right?
Yes.
You have,
You
have double MNAV. You have MNAV inception.
Yeah, MNAV inception. Well, not to change the subject to DATs, but one thing that's going on in the markets, which is where I wanted to turn next, is that Solana's been outperforming in the last, 3 or 4 weeks. And this follows a period where Ethereum was finally outperforming Bitcoin. For the longest time in the first half of this year, it looked like the bull market in crypto was really just the bull market in Bitcoin and maybe in some DATs. But as for the rest of the complex, there wasn't as much participation. That changed with Ethereum and the launch of some of these Ethereum vehicles, and I think a clarity of message and purpose, where people like Tom Lee were on television talking about how, look, hey, if you think stablecoins are this new killer app in the ChatGPT of crypto, be aware that the majority of stablecoins exist on Ethereum and, of course, L2s and the rest of it. But this is the thesis that has, I think, helped people to really kind of grab onto Ethereum. More recently, we've seen Solana having its day in the sun, no pun intended. And part of that, I think, is driven by fundamentals. I read recently that the DeFi TVL on Solana hit an all-time high of $12 billion. And that DeFi TVL is total value locked. It's kind of like assets deployed in the industry, essentially. That hit 100 billion. So Solana is a little over 10%, but is growing quite quickly. What do you make of the market moves and Solana's outperformance?
Yeah, I mean, I think it's mostly DApp related, to be honest with you. It's very similar to Ethereum, where I don't think the fundamental use case has changed that much. I think it was just like, Kyle Samani, the Multicoin, the founder of Multicoin Capital, which is like one of the largest crypto hedge funds, him being announced as the chairman of like a SOL treasury co that raised 1.65 billion in cash to buy Solana. Like, that's mostly what's driving the momentum in the short term. And he's also very aggressive when it comes to like public relations. Like, I think one of the very first things he did was call out Tom Lee and say, let's do a debate on Solana versus Ethereum. Yeah. And he's actually like, I mean, Tom Lee knows a lot about crypto, but Kyle lives and breathes crypto. So he's obviously far less known within like the kind of like the CNBC TradFi circles, though. I think that's mostly, again, I think like the fundamentals for Solana, in my opinion, and we flagged this a year ago, probably a little bit too early, to be honest with you, but the fundamentals for Solana, like I would be a little bit more neutral on, just because it seems like the hot ball of money has sort of moved to Hyperliquid. Hyperliquid is the largest decentralized perps DEX. So for like our listeners who don't know, it's essentially a place where crypto traders can trade crypto assets with huge leverage, up to 100x. And so Solana was kind of like the home of meme coins. And the problem is like a lot of that money has moved away from meme coins to just like like trading DATs on the traditional markets, but also B, to like trading Bitcoin and Ethereum and Solana itself with leverage on Hyperliquid. So and then Hype itself has gone from like $20 to $50 in 3 or 4 months. So it's just been like, it's been kind of like sucking up a lot of that capital. And you also see some stuff with prediction markets as well. I think that's more minor, to be honest with you. But so yeah, I think like I would just say like the hot ball of money has sort of moved on a little bit from Solana. And that's not to say I'm not bullish on Solana long term, but to me, this is kind of like, yeah, I would say this isn't a fundamentally driven move at all. This is mostly like a DAT driven move. But it also, if it's a DAT driven move, we're very early into this part of the DAT driven move, right? Like the Solana DAT just got announced, so it hasn't even, to my knowledge, hasn't even started deploying. So maybe in the short term.
There are a couple of Solana DATs already out there. UPAC-T,
yes,
Development Corp, Sol Strategies. There are, my understanding is, many more coming, and the multi-coin one is one of 4 that could be in the billions. And unlike some of these other single asset DATs, this one is an all cash deal versus having sponsors roll their crypto. This is going to be fresh capital that goes towards buying these assets. And if it's one of several, all else being equal, that's net buying of billions of dollars going into SOL that is queued up but hasn't yet deployed. So I don't know. I mean, the market's supposed to be a weighing machine. It should be pricing this in. Is this move? And is this at all the, has it been fully priced in, I guess is the question. Like, this is a pretty modest move in my opinion, from like 180 190 to 215 on SOL, given that we're about to see this huge asymmetry. We did some analysis actually of the digital asset group, looking at how much the ETH DATs and ETH ETFs were buying relative to the net new supply that was hitting the market, and I can't remember the metric. It was like 40 to 1 or 51 or something like that. Jake's on the line. Jake, do you know that number off the top of your head?
Yeah, I think it was 27 times. 27
times. So I was a little over that. But yeah, 27 times. And in Solana's case, they have a higher inflation rate, but some of that inflation goes towards, I think, buying back and retiring SOL tokens. So in other words, there's going to be, I don't know if it's going to be 27 times, but we're going to have this similar dynamic. And, history doesn't repeat, but it rhymes. And if this SOL fall looks like ETH summer, then we're going to see some more outperformance. And maybe we know this. Maybe we're sharing this like insane alpha with people. For me, I can't help but feel like it's got to be fully priced in by now, because everyone's aware of, the success of this multi-coin fundraising, and that there probably are more offerings like it coming down the road. But maybe it is just that simple. So anyway, that's I'm kind of thinking it doesn't feel like enough of a move based on what the market knows.
Yeah,
what it should have priced in by now.
No, but that's what's interesting about this is, another really good example of this, like the crypto market barely pricing in like very significant DAT announcements, was WorldCoin, for example. So WorldCoin announced that there was a DAT that had raised. Let me get the exact number. So this company called 8Co raised a $250 million sort of deal to buy WorldCoin, like essentially converting itself into like a WorldCoin DAT. and the stock is up 3,000%. But interestingly enough, the WorldCoin value, it ended up going up. This was yesterday. It ended up going up about. It ended up doubling essentially. So it ended up going from 90 cents to $1.80. But it didn't do this in like one big spike. It did it over the course of like essentially 2 days, which is very bizarre if you believe, or like, maybe a day and a half. Like very bizarre if you believe in efficient market theory, that like news of this size would take so long to digest.
That's what I'm saying.
So there's a lot of like, I mean, that's what people always talk about with crypto. Is like it's an incredibly inefficient market. Especially on the momentum side. I mean, we've seen the same thing too, where projects announce that they're shutting down, and the token's down like 10%. When it ends up going down 99%, but it takes like 5 days to go to zero. You know what I mean? Even though like there's a lot of inefficiency in the market. And sometimes it makes you question whether you even believe kind of like what you're seeing. You're like, oh, maybe there's something wrong with this announcement. Like, why is the token not reacting? And then often the token ends up reacting, and you're like, oh, wow, that was like pretty stupid. Especially in a bull market when attention is incredibly fragmented across tons and tons of different crypto assets, as well as like the public market space. So I think like I wouldn't like I guess my whole point is you sometimes can kind of discount the market's moves a bit. And I think like right now there's still a lot of skepticism. Like that's what's really interesting about this crypto market is it's like the most pessimistic, skeptical crypto bull market I've ever seen. Like people are like,
everyone's looking for the cheap.
People are actually quite depressed still. I would say like sentiment on crypto Twitter is actually like quite bad, which is interesting given that Bitcoin's at all-time highs and like ETH is like close to all-time high.
Yeah. Close enough.
No, like close enough. Like it's just interesting. Like it's like very like from a price level, you would think we're at the end of the bull market, but from a sentiment level, it doesn't seem like we're close. Like everyone's bearish. Unless crypto Twitter, which I would consider like one of the dumbest corners of the internet, has suddenly become very smart. Like I don't know. Like we seem to like sentiment wise, we still seem a long way off from the top.
Many of crypto's smartest people are now TradFi people. It's all coming full circle.
Yes, the boomers won in the end.
Yeah. The DAT, a lot of the DAT people move in silence until it's time to go public. So you're not seeing as much of the bullishness on Twitter. You gotta wait. You gotta wait it out. Anyway, the boomers have won. What's that quote? It's like you either die a hero or live long enough. You either die a degen or live long enough to become a boomer, something like that. There's like a crypto version.
Yeah,
I've lived long enough.
You either die.
Go ahead.
You either die a crypto native or you live long enough to become TradFi.
That's
probably.
Yeah, exactly. Well, on that cheerful note, I don't know if there's much else to talk about today. We just wanted to kind of catch up on what's going on in the world. Maybe the one final thing is that the BLS has revised all its jobs numbers. So like 2 million jobs that were apparently created just disappeared because of data fallacies or data problems. And that, if anything, boosts the case for more rate cuts. I think after the week labor data that came out last week, we're recording this September 9th, 2025. So this is going to be stale if you're re-listening to this in a few months. But anyway, whatever. Basically kind of it helped to increase the odds significantly that there will be at least one rate cut, or there'll be a rate cut the next announcement in September, or the next cycle, and then maybe subsequent ones after that. And this data this week maybe bolsters that case even more. And we're in this very interesting, limbo that we find ourselves where bad news is good news because weak labor data means more rate cuts, which means asset prices go up. But too much bad news can actually be bad news. And now I think maybe there's a bit of skittishness about, oh God, are things worse in the economy than people perhaps imagined. For crypto assets, I have to think that just like if rates get cut, the risky end of the tail of the whole space should benefit disproportionately. I feel like that's how things have operated in the past, but wanted to get your take on that quickly.
Yeah. I don't know. Like, to me, this has been like the most telegraphed rate cut of all time. So I'm not sure. You know what I mean? I think it would take a lot for the crypto markets to sort of react. Like we would need to see like the chances of like a jumbo rate cut or, further projected rate cuts kind of coming in the next year to really see a lot of movement. But yeah, I mean, generally crypto is obviously a long tail asset, long tail, long-term long tail assets obviously benefit quite a bit when rates get cut. So I think like, it's obviously good for crypto. We'll sort of see. I guess it's like, it's good for crypto, but not as good for stable coins. Obviously stable coins benefit a lot with higher rates. So I guess that's like one thing to consider as well.
Yeah, for sure. Interesting. All right. Well, listen, Andrew, really good conversation. Enjoyed that today. That's it for this week's episode of DeFi Decoded. Thanks for joining us. A little bit on the markets, on some Wall Street embrace of crypto and everything in between. Always a great conversation. So that's it for this week. We're back with our regularly scheduled programming next week. A lot of great guests queued up, keeping on this incredible trend that we've had recently with some real A-plus listers to help us make sense of everything that's going on. So please tune in and make sure to like, review, and comment on the episode wherever you get it. Helps other people find it, and it helps to keep us going around here. So thanks for tuning in. See you next time. Bye.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.